Hey traders and investors, it's Serge Berger here. Today let's have a look at something very, very important, and a question that a lot of people were asking themselves this year, which is how do you make money in a low volatility, low yield, and low directional move environment? And if you look at it year to date, a lot of the fund managers and a lot of individual investors are underperforming the market. So what's the clue here to make money? A lot of institutional guys or the more active types basically rely on some sort of volatility or on a directional movement. And so far this year we have neither. And institutional investors on the fixed income side aren't making a lot of money because yields aren't doing a ton either. So that's a tricky environment. And the best answer I can give you is it depends on your time horizon. But very simply, if you are a quicker type but a more active investors, you got to get active. And I mean really active. Not like day trading kind of stuff, but you got to get active and you can make money. We're doing that in the Steady Trader Trade Alert service. We're up 15% year to date because we were active and actively managing our risk. Secondly, or alternatively, if your time horizon is more than, say, a couple of months or so, then pretty much you got to stay with the trend. And it's as boring as it sounds, and as risky as that can be, basically that has worked. That doesn't necessarily have to continue working in a linear fashion, but at the end of the day, if you buy the dips, you can remain making some sort of money in some underperforming sectors year to date. More to the former point, which is what I do and what we're doing for clients, and as well as in the Trade Alert service for folks to learn from and trade along if they wish. It's really the theme that I laid out at some point in about November last year, which I called it sort of had a call to take action, or get active, I should say. And basically, for a lot of people, unfortunately, that aren't familiar with some of these names or are scared of these names, you're going to have to start trading, or at least actively investing around stocks that you may perceive to be somewhat risky, but they're not, right? So, for example, you can take a look at something like a Facebook, which routinely throws off, good trades. Not a kind of stock you necessarily want to hold through earnings, right? But from an active investor or trading standpoint of view, the stock reacts very well technically. It routinely, builds good bottoms to push higher from. Oops, sorry, I hit the wrong button there. And respect its various trend lines. And then you can look at things like in the similar space, look at things like a Twitter, which you have to trade with much smaller size than something like a Facebook. But Twitter, when it gets oversold, it bounces. When it gets overbought, it tends to retreat. It works very well, but you gotta be active. It's not the kind of stock you want to just close your eye and blindly buy. The kind of stock you want to get in with a fairly small position, manage your risk, set a target of 5 to 10%, and take the trade off once the target is reached. Other stocks, and particularly for even just like the Russell 2000 itself, IWM. Russell 2000 has given us numerous terrific trades so far this year, because the Russell 2000, the way it trades is that it actually, when it tends to get oversold or overbought, it tends to give us very clearly defined one-day signals. So, for example, if you have a look at just the top here, on July 1st, the stock rallied into the into the first day of the quarter and the second half, and basically gave us a so-called shooting star type of candle, which a couple days later was followed by follow-through selling, and then really you had a clue to get short. So you have a lot of different areas out there. As long as you can get yourself to be comfortable with things that you traditionally wouldn't necessarily touch too much from sort of a buy and hold strategy. If you want to get active and if you want to make money in this market, you got to get active, and that is going to mean going to some stocks that, as long as there's a lot of liquidity, should also provide you with very clearly defined technical areas to trade around. If you're interested in any more of that, you can go to thesteadytrader.com and click on the Steady Trader Trade Alerts. Otherwise, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. I'll see you in the next video.